What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. In this series, I am sharing with you what stocks are at the top of my watch list going into the week ahead, how I am managing my own portfolio, as well as how I feel about the market conditions. So if you get any value out of that, remember to click that like and subscribe button and let's jump in. But first, I need some help. I need your feedback and I want to know, is there anything that I should change or add or remove from this watch list? Is there anything that you don't get any value out of? Is there anything that you like? Is there anything that you'd like me to add? Tell me and give me your feedback in the comments down below. I'd love to know just what you think and how I can improve this weekly watch list to provide you with more value. Now, to start us off this week, we're just going to take a quick look at the indices. This is the NASDAQ. It's heavily focused on technology, and as you can see, we have had a major sell-off from around 1,600 all the way down to 10,500. We're currently around 11,000 right now, but we are definitely in a bearish trend right now, and we don't have a whole lot of great signs of breaking this trend. It looks like last week we just got kind of rejected at our moving average. You could also probably draw a trend line right here. So really not a great sign from the NASDAQ. The S&P 500, sort of the exact same thing, coming down to our pre-COVID highs. Looks like we may have some support there, but we are very, very clearly in a bearish trend. The Dow Jones has bounced off of our pre-COVID highs. It looks like we had a nice little rally, but again, last week was definitely a sell-off. So not a great week in the markets, definitely not a good week for Bitcoin. We fell from above 20,000 to below 20,000, and we're currently sitting at 19,030 as I film this video. Year to date, Bitcoin is down about 58%. I was thinking that we might have some support around 19,000 here because it looks like we got bought up before the close at 19,000 right here on a couple of other days. We'll have to see what happens there though. Also, a new Bitcoin ETF just got proposed and rejected by the SEC. Now they're going to court over that. So we'll see how that kind of goes. And lastly, I do think that regulations will be a good thing for the crypto market. I think that there's a lot of big money sitting on the sidelines because they either can't invest or it's just too uncertain. But if we can get good regulations that promote the industry and help the industry, I think that could be a huge catalyst for some of that big money to get into the market to buy Bitcoin. And eventually that's going to start to drive the price up. It's just a matter of how long that's going to take. Now, when it comes to earnings, there's almost nothing happening this week. We got Levi's, we got WD-40, a couple of other companies reporting this week, but no major stocks that I like to follow. What I do want to talk about is what has happened over the last 2 years. And so this chart right here is the US money supply. This is basically how much money is in circulation. And if the US government prints money, then it starts to go up pretty dramatically. You can see over time, they fairly consistently print money. And then recently at the start of 2020 here when COVID hit, they printed a lot of money. And it's really interesting because if you think back over the last 2 years, it's been kind of a chain event to get us to where we're at today. And so the first thing that happened was that COVID hit and it caused the economy to freeze. Everybody was unsure of what was going to happen. They kind of panicked, they locked up, they stayed at home, businesses shut down, governments shut businesses down, and the economy kind of went on pause. Because of that, a lot of people suffered economically. They weren't able to make money, they weren't able to make income, or they got laid off from their job. To solve that specific problem, governments printed money to help citizens get by. If you lost your job due to COVID, if you had any repercussions because of COVID, it was more than likely that you were going to be able to get funding from the federal government. And that money very clearly came from the federal government printing it to supply it to the citizens. You can see that by this chart right here. As soon as COVID hit and that money started to get made, that money got dispersed to the citizens and the total supply of money increased. Now, because the total money of supply increased, there was more money chasing after the same amount of goods and actually a limited amount of goods because of the supply chain issues. And so in that scenario, the manufacturers and the companies that are supplying these goods, they can raise the prices. Obviously, their inputs are also going up, but basically it causes this cycle where the cost to produce the item goes up, they need to make more money, so they charge more to the next person. And that gives us a scenario where everything costs more. And that puts us in an environment where we're pretty much at today, where inflation has increased to 8%. So if you hold $100,000 in the bank right now, next year, it's only going to buy you $92,000 worth of goods. And if you wait 20 or 30 years at that rate, you're almost going to be broke by the end of it, which is not a good thing for any healthy, functioning economy. And so to counteract this and to try and lower inflation, the governments are trying to slow things down. And to do that, they're increasing the interest rates. You've probably heard that recently. The US government just increased the interest rate by 0.75%. The Bank of Canada increased the interest rate by 0.5%. This has happened a couple of times now, and that federal interest rate is going up. What that means is that the banks that lend out money to me and you for mortgages and financing and cars and business loans, well, they can lend that money to the government and get a guaranteed risk-free return on their money of about 1.5% right now. Which means if they're going to give us money for a mortgage or a car that has some risk to it, they now need to make more than 1.5%. And so every time the government rate goes up, it means that the banks are going to charge us more. And if we can't afford it, or if we start to run out of money, then we will default on those loans and it will become a major, major burden for a lot of citizens. And that is what could happen in the future. That's possibly what we're starting to see, and that could cause a recession. A recession is caused by 2 consecutive quarters of negative GDP growth. So basically, your economy is slowing down for 2 quarters in a row. That would be what is considered a recession. So far, we have had 1 quarter, and the next quarter gets reported at the end of July. So if that report at the end of July says we had negative GDP growth in Q2, that would put the United States in a recession. Pretty much the same scenario for Canada as well. And so COVID caused a freeze. The governments printed money. The printed money caused inflation. The inflation made the governments increase the interest rates. The interest rates are now going to put us into a recession. It has been this back and forth along what should have been a fairly steady increase that we saw from basically 2012 to 2020, which was really nice. And so this is the scenario that we are in. And the reason it's concerning is because the USA debt balance in terms of non-housing debt and housing debt are both at all-time highs. They're higher than they were in 2008, and people in general are carrying fairly high debt amounts. And so if the price of real estate falls or if interest rates start to go up, that debt becomes more hard to service. And in those scenarios, it puts us deeper and deeper into a recession. So what you need to think about is, how are you going to make money in a recession? This is really, really important. And so here are a couple of ways to do it. I've made a video on these 3 options here on my channel. I'll try and link it up right now, but inverse ETFs are absolutely fantastic. All you have to do is choose an industry or choose a market that you think is going to go down over the next little while, and if you buy an inverse ETF, you make money when that market or industry goes down. It's the simplest, easiest way to do it. You can also buy put options if you want a little bit higher risk to reward ratio. You can also short stocks if you want to choose individual companies. Both the shorting stocks and put options have a little bit higher risk. And the other option here is that in times of recession, in times of uncertainty, in times of still moderate to high inflation, people still want to invest their cash. And what they invest it into is safe cash flowing assets like dividend stocks or real estate that is going to pay you out monthly. And so these are the kind of things that you may want to consider investing into. For me, I really like dividend stocks, and there's a couple that I'm going to point out to you right now. The first one here is Southern Copper Corporation. This one stood out to me. They're one of the largest copper manufacturers in the world. I think copper is going to be in high demand over the next 5 to 10 years, largely because of electric vehicles and batteries and motors and the just general trend of shifting away from fossil fuels to electrification. Everything is going to use copper. So copper is going to be super important. The company over the last 12 months has paid out 9.9% dividend, which is almost unheard of. It is not super consistent though, like these numbers do vary. And they are only paying out 80% payout ratio with that 9.9% dividend. I thought that was fairly reasonable. Yes, 80% is a little bit high, but I think over the long term, this company has a lot of demand for their product. They're also increasing their revenue fairly steadily year over year, and they have a healthy balance sheet right now. So if it comes to copper, this is probably one of my top picks. I really like the company for the dividend and the cash flow, but I would be watching for support here around $50. If we continue to fall below $50, I like the opportunity more and more, but I'm not buying in until we have good support and we're going in the bullish direction. Next company here is Vale SA. They're one of the largest nickel producers. Over the last 12 months, they have a 15% dividend yield with only a 56% payout ratio, which is absolutely unheard of. and they're also increasing their revenue extremely steadily. I like these companies. I think there's a lot of demand for electrification. I think there's a lot of demand for electric vehicles, and I think both of these companies are well positioned to take advantage. Now, quick disclaimer about these mining companies is that the dividends are not always steady, meaning that they change from dividend to dividend. Sometimes they make more money and they pay it out. Sometimes they make less money and you get a very small dividend. It really depends on the company, and it's also very dependent on the price of the underlying commodity that they are mining for. Vale SA is going for nickel, and Southern Copper Corporation is obviously going for copper. And so lots of different variables here, but if you're looking for cash flow, this is definitely an area I would check out and spend some time doing your own due diligence. Now, two companies here that I think might be oversold. Udemy is one of them. I've talked about this company a lot on my channel. They had an amazing run from under $10 to over $16, a 60% increase here in just a matter of a month, and they have come all the way back down to this exact same level. So I'm not saying it's going to happen again, but I'm watching this $10 level very closely for Udemy. They're currently trading at a price to sales ratio of 2.3, which I personally think is pretty cheap, and they have very steady revenue increases. I like the platform, I like the mission, I like what they're doing, and at $10, I think it's a pretty reasonable stock. A few months ago, it was much, much higher before this massive sell-off, and personally, I think Udemy has a major opportunity going into the future here. Now, the last one here is Upwork. Upwork is kind of a platform where you can hire people to work for you online and kind of digitally. It's a really, really great platform. I use it for several different kind of projects that I'm working on. I'm watching right now for a breakout of this $23 to $25 price level. As you can see, we hit 23, came down to 15, back up to 23 right now. And if we can break through this $23 to $25 level, I think it's got a lot of room to run up to at least $30. Again, you can see we tested $29.92 right here. I think it's got a nice little $5 move baked in there, and if we start to see any correction in the market, I think Upwork's going to do very, very well. They are significantly down from their high though, so definitely something to keep in mind. I personally think it's oversold, but we'll have to see if they can continue this revenue growth. I mean, that's going to be the real key for the company. Now, if you're interested in some free money, Questrade is giving away $50 in free commissions to anybody that creates an account using the link in my description. That is the platform that I use. That's where I draw all of these charts from. That's pretty much what I use to make all of my trades. I also use Newton for all of my crypto, and they are giving you a free $25 if you create an account with my link. It's really, really nice. All you have to do is deposit $100 with like an e-transfer. You get $25 as soon as you're done that. You can do anything you want with it afterwards. And I personally use Newton to basically store and manage all of my crypto. Now, if you're interested in learning more about the stock market and how to swing trade, invest, or day trade, definitely check out my Stock Market Fundamentals course. It's hosted on Skillshare, and if you use the link down below, you get 1 month completely free access to the entire platform. It has over 10 hours of content, over 12,000 students, over 400 reviews, and over 1.6 million minutes of watch time. So I promise you, it'll be the best free resource that you can find online. And if you got any value out of this video, definitely remember to click that like and subscribe button. Thank you guys so much for watching. Good luck trading, good luck investing, and we'll see you soon.